Hello everyone and welcome back to my channel. Today I will be doing the CSEC Principles of Accounts, July 2021, paper 2. This video will be covering question 3, but I want to take this opportunity to say thank you to all of you students and others visitors who have been watching my channel and who have been supporting it for quite some time now. I do appreciate it. And if you are visiting my channel for the first time, a very warm welcome. And please go ahead and hit that subscribe button and turn on your notification bell so that you know when new videos are being uploaded. I guarantee you that you will receive value from this channel. You will learn a lot. And also, please go ahead and hit that like button. When you do that, you allow this video to reach as many students as possible. And I know sometimes when you're watching the video, you'll see ads pop up from time to time. I know they can be annoying, but the only way you can say thank you and to show your appreciation is by allowing those ads to play out. So just take a little break and come back, rejuvenate yourself. So let's get into this paper. So we have a trial balance here. What are they asking us to do? They say S-Light Wholesale is owned and operated by Haven Prosper. Her business financial year ended on the 31st of May 2021. The following trial balance was produced on that date. So here they gave us our trial balance of S-Light Wholesale as of 31st of May 2021, and they gave us our debit and our credit balances. All right. So we see the figure there. So the additional information that they give us, they say inventory was valued at $32,000 on the 31st of May 2021. So we know that is the closing inventory or closing inventory. And this would have been the 37,000 would have been the opening inventory. So what do they ask us now? The first part of the question says, use information from the trial balance above to calculate the working capital ratio for the current year. In the space provided below, they ask us to show all working clearly. Now, we know there is a formula for us to find our current ratio. What's that? We know that the formula says current assets divided into our current liabilities. So, what are our current assets? Well, what did they give us? They gave us cash, 10,000, accounts receivable, 42,000, and inventory, that's the opening inventory, 32,000. So our total current assets is 84,000. And our current liabilities, there was just one, and that's accounts payable, and that was 64,000. So when we divide 84,000 into 64,000, our ratio is 1.31 to 1. So we show all the workings. And that would have been 3 marks for that question. Let's move on to the second part. It says the working capital ratio at the end of May 2020 was 1.70 to 1. Based on your calculated ratio in A1 above that we just worked out, we got 1.31 to 1. Identify one significance of the change in ratios for the financial position of the business. So we notice that in 2021 it was 1.31 to 1, and then the previous year it was 1.70 to 1. What did we notice? That there has been a decrease in our current assets, or it could have been an increase in the short-term debt, or it could have been a combination of both. So what do this tell us about the business? This is going to result in liquidity problems in the business. 1 mark for that. So let's move on to the second part of question 3A. It says results from calculations of the receivables collection period are shown below for S-Lite wholesale for the two financial years ended 31st of May 2020 and 2021. So here they give us receivables collection period calculations as at 31st of May 2020, 65 days. As at 31st of May 2021, 59.7 days. So what do they ask us? They say interpret the significance of these two receivables collection periods ratio for the business performance of S-Lite wholesale. And this is just one mark. So this is going to be an interaction. This is a learning process as well as testing to see how much knowledge you have gained. So what I want you to do is to give me an answer in the comment section below and I'll respond to that at some point. One mark for that question. So it's nothing difficult or too lengthy. Let's move on to the B part. It says use information taken from the trial balance on page 12 to prepare an income statement below for S-Lite Wholesale for the year ended 31st of May 2021. So we know our income statement, or in other words, our trading profit and loss account, same thing. So based on the information given, if you would go back, you would see all the information that we took from that is what I've put together to make this income statement. So we know the first thing, sales, which is 257,500. Then we're going to less our sales return, 900, and that would give our net sales 256,600. Then we're going to less our cost of goods sold, our cost of sales, same thing. And we begin with our opening stock at a debit balance of 37,000. And next we would have our purchases. And our purchases was 98,000, but we have to look to see if there were any purchases outwards. So did they provide us with any in the trial balance? No. So what do we do? Our next step is to add our carriage inwards, which is 1,200, and that gives us a total of 99,200. And what we do with that figure, we add that to our opening stock, 37,000, and that give us our cost of goods available for sale, which is $136,200. What do we do next? We move on to our closing stock. We're going to less our closing stock. What was the closing stock figure? $32,000. And when we deduct that from our cost of goods available for sale, that figure that we get, we will then less that from our net sales, which would give us our gross income. And that is 152,400. What do we do next? We know next, according to our format, is revenues. Were there any revenues provided in the question? No, we didn't see any. So we would now move on to our expenses and we would less our expenses. And there was just only one that they gave us, operating expenses, and that's $45,000. So when we less that from our gross income, that gives us our net income that they ask us for, which is $107,400. All right, so we prepared our income statement for S-Lite, and that's 9 marks for that question. Let's move on now and see what else they ask us to do. So let's move on to the C part of the question now. C part of question 3. Here it says, S-Light Wholesale's bank statement showed an overdraft of $1,118 on the 31st of May 2021. So once we hear bank statement overdraft, what does that gives you an idea that we're going to do? A bank reconciliation statement. All right. Hear what they say. They say on that same day, the cash book balance was overdrawn by $678. The following discrepancies between the two records were discovered. So let's see what they say. On the first one, a check sent to a supplier, A. Jamili, or however they pronounce that, did not appear on the bank statement. $700. So what does this tell us? Obviously, that the checks, they were not cashed. So even though it was paid out before the bank statement was actually prepared, right? So we know that is unpresented check. That's an unpresented check. All right. Let's look at the second discrepancy. It says the bank statement showed a debit for Haven Preparers Personal Private Home Insurance, $240. So guess what? So this $240, this is shown on the bank statement, but not in the cash book. Look at what they say here. On that same day, the cash book balance was overdrawn by $678. So there have to be an adjustment in the cash book, isn't that so? Right. So we know that this is going to affect what? Drawings, don't it? Is that so? Yes. All right. So what we would have to do with that figure? We would have to add this 240 to 678 so that it could be credited in the cash book. And that would give us what? 918. So we already know what would go to the cash book already. The third says the bank had not recorded cash sales deposit on the 31st of May 2021. So what's that? So this is going to be what? A late lodgement. So I had so I had said, so this is what is going to be a late lodgement, right? So this is our figure, which would be, so the bank had not recorded cash sales, so this is going to be a late lodgement. Right, so I'd said late lodgement somewhere here. That obviously was an error. I was thinking of this part of the question before. So this is where the late lodgement. So we know in preparing our bank statement, what do? We first have to put our overdrawn balance as per bank statement, and that's what? 1,118. So that's the first. And then we're going to add our unpresented check, which is A. Jamili, 700. So when we add 700 to 1,118, we get 1,818. Then what are we going to do next? We're going to less our late lodgement, which is $900. And when we less our $900, we get what? $918. And that represents the overdrawn balance as per cash book, which we had just worked out to, which was the 678 added to our 240. So really and truly, this is what our bank reconciliation statement should look like. We know there's another way that we could have worked it out. We could have, use our balance as per bank statement. Then we add our unpresented check and then less our late lodgement. And that would be the cash book balance. All right. So that's what our bank reconciliation of S-Light Wholesale 31st of May 2021 should look like. All right, so there you have it. We have come to the end of this video. Thank you so much for watching.